Hey everybody, today I want to just talk a little bit about Chinese stock delisting fears and things like that. I'm not a financial advisor. I'm just a person giving my own opinion on things. I've stayed true to these thoughts for a very long time, and yeah, I just want to share my views regarding delisting fears when it comes to shell companies from China. And so the first thing I need to preface this by saying is that yeah, I'm not a financial advisor, just my own opinion. Do your own due diligence. But when it comes to viewing a Chinese company, it's just like any other company, whether it's from America or not. Okay, you have companies in America that cook the books, just like in America. You have fraudulent accounting, you have discrepancies, you have SEE, yeah, and you have a lot of auditors too, right? So it's not just a specific thing in China. It's just that when a Chinese company does do fraudulent activities like an American company, with all the negative sentiment, it's just like an easy target to short, right? But that doesn't mean these companies don't recover or that they're not actual companies with good operations and that do provide a future for growth. So like an example would be like Luckin Coffee, okay? So let's take a look at that. This is a company that I invested in and I was trading in around here. And then Muddy Waters report came out explaining how Luckin Coffee had cooked the books. So the stock went down to here and I ended up buying around this area. And look, it's one of my best performing companies in my portfolio till this day. And I think a lot of people feel very similar to these. Just because the company cook the books doesn't mean that there's not hard assets that have a lot of value. Doesn't mean that they aren't a good company that's constantly expanding with over 9,000 stores, right? And doesn't mean that it's not a good business. It's just that they were cooking the books to make better numbers and inflated numbers. But a lot of American companies do this too, right? It's not just Enron or Wells Fargo. Like there's a lot of companies in America that do this every day. So if we look at the SEC filing, maybe it'll be on the main page. We usually get what's a good word to look? I haven't done this in a while. SEC whistleblower. There we go. So the latest news you can see on the SEC's whistleblower office is that you can look like there's a lot of American companies that have gone through fraudulent activities, or they've been they've been doing things against the law, or maybe accounting practices are shady, or just going against human rights. There's a lot of things that the SEC picks up on. It's like every month you have cases like this. And this isn't even the main one. This is just like the whistleblowers. The SEC catches a lot of companies in America doing a lot of fraudulent and shady activities. So it's not just an American thing. It's not just a Chinese thing. It's an American thing. So you can always check the SEC website, and you can find a lot of companies. But I've also worked for companies myself that, if I had reported them to the SEC, these companies would go underwater, or they'd be under a lot of scrutiny. So it's not just a Chinese thing. A lot of American companies do it. That's why you have the SEC in the first place. It's just that when an American company does it, you have a lot of invested interest to not have these companies fail. But when you have a Chinese company, there's so much controversy behind it, and it's just such an easy short that you're gonna have a lot of you're gonna see a lot of repercussions in the stock's price as a result. And it's not because of trust issues per se. I think it's more because it's like a chain reaction, right? So it's like if Tesla was found doing accounting fraud or cooking the books or accounting tricks, which they kind of did, right? When they became profitable, they kind of glazed the numbers, made it look a little bit better so they could become profitable. When they did that, a lot of people kind of knew this, but it's like it's an American company. Even if the Tesla numbers were fraudulent, would we see like a large share price depreciation? Perhaps, but nowhere near like a Luckin Coffee, just because this isn't really, it's an American company, sort of. When you look at DD2, like the stock, this one had also a lot of controversy too. And with Luckin Coffee, you have to remember that the company's still doing very well. It's a real thing. So just because the share price had dropped, they've recovered tremendously. Like, okay. So when you look at DD2, it IPO'd in 2021. At the time, I think there was the 100th year celebration for China, or there was some kind of big political thing going on, and I think it was the Chinese SEC was not okay with DD listing on the NASDAQ or the New York Stock Exchange, but it was pushed anyway because there's too many things going on in China, so it was kind of allowed to happen. But despite that, it was weird because a lot of investors knew that DD had a lot of scandalous activities going on. But despite all that, DD was still allowed to be listed. So if retail investors knew there was something wrong with DD, why was it still allowed to be listed anyway? That's kind of weird, right? So, you have a lot of interest from both American and Chinese investors and foreign investors everywhere to make a profit, shorting the stock or having the stock appreciate in price. But so when it comes to Chinese stocks being shorted, it's much easier to get the momentum going, in my opinion, right? Like once you draw sentiment, you can just keep piling it on and just give all this anti-China fear, and then all the shorts, whether you like the company or not, it's like an easy short, right? It's like much less risky to short a Chinese stock versus maybe an American company that's its counterpart. So going more into delisting fears. So most of these companies, if not all of them, are ADRs. They're like shell companies, right? Listed on the Cayman Islands, from my understanding. But, in my opinion, if you're trading on a brokerage, it's not really much difference. Like, here's the first thing. If you're trading on a brokerage, do you really have voting power? Like, are you losing any voting power if you own like a couple thousand shares of a company? Not really. Like, if I own a couple, like, shares of Luckin Coffee, like a couple thousand and a couple thousand of NIO or something, like, is my vote really gonna matter? Probably not, right? This goes with any company too. Like if I own a couple hundred shares in Tesla, is it really gonna matter what I think? My vote matters? Not really. And do I really care to vote? Not really. I generally trust management for the companies I invest in, and I'm just a retail investor, so my vote to me doesn't really matter too much. My vote is more of my dollars and where I take my money. Another thing too is like, what benefit does China have from delisting their companies from China, like from the New York Stock Exchange or any American stock exchange or any stock exchange outside of China? Like, what benefit would China get? Well, they would get none, right? Because being listed on the American Stock Exchange benefits both America and China, because the US and China are the world's two largest economies that are deeply intertwined in their financial markets and their trading, and they're just in dependence on each other. So we are in a globalized economy, which means that if you're, for example, from an American perspective, right? Like if your pensions are filled with Chinese companies or US companies that rely heavily on China, then if you were to delist Chinese companies, this would strain the economic dependence that each of these countries have for each other. So a lot of the companies you have probably in your pensions, your retirements, these large weighted index funds, these S&P's 500, NASDAQ, all these large indices, they're probably filled with a lot of American companies that rely on China. So, like Target, Walmart, Google, Intel, Tesla, Nvidia. Like Nvidia relies 20 to 25% of its revenues from China. If you cut ties with China, then this company, I don't know if it's profitable, and I don't know if a lot of these companies are profitable, from small mom and pop stores to medium size and large size. These companies, a lot of them rely on Chinese products, goods, and services, and then repackaging it and selling it in America. When you go to Walmart, when you go to Target, when you go to your local grocery store, a lot of these things are from China. Even like your vehicles that you drive, the components used within them, the manufacturing done, most of it's in China. So like without China, a lot of these things become unprofitable. Here's an example so you can better understand this, like how reliant we are on China. Today, I woke up, I used my smartphone, which was made in China. The pieces were made in China. The chips were made in China. The phone was made in China. It was assembled in China. My computer was partially, if not mostly, made in China. My Samsung device, despite being from Korea, like a lot of it was made in China. My keyboard, my mouse that I'm using to speak to you was made in China. The Audio Technica microphone I'm using was partially made in China. And I drove my Honda, made in Japan, but has pieces from China. And then I went to the store today. I went to Walmart and I bought a lot of goods and products from China. And then the stuff that they use to build the stores to hold all the products were also made in China. So there's no way you cannot avoid this, right? And without Chinese manufacturing, without Chinese goods, these companies would not be profitable. A lot of them won't. And I think that's why we see a lot of these American listed companies like Nike or Intel or Nvidia. Like, I know they've had some rises, but a lot of them have to rely on China for whether it be their consumers, whether it be the average consumer like you and I, or whether it be from their manufacturing rising in prices. But I shop on Temu. It works great. So when I went to the fishing store today, majority of the hooks that they sell there are either made in Japan or China. A lot of the fishing lines, Japan or China. The fishing poles, Japan or China. So a lot of the stuff we buy is just made in China. And if you were to cut that off, that relation with China, if we're trying to reach 2% for inflation, it's just never going to happen, because Chinese goods and services allow for Americans' cost of living to be so deflated, I guess. Like, rather than pay $100 after shopping at Walmart, it's going to cost you $300 if you're actually paying for American-made goods. Like, if you were to, I read an article, like if you were to buy an iPhone made in China, in America, it's going to cost you $1,000 here. But if we didn't have China, first of all, we don't have the skilled manual labor to actually make these iPhones in America. And if we were to get the raw materials, the manufacturing, the work labor, it's going to cost us like $4,000, $5,000, $10,000. So it's not even a viable market. So, and that doesn't even mean the quality is going to be better. It could be worse. So, delisting the Chinese companies would just adversely affect the American institutional and individual investors, because a lot of these pension funds, a lot of the retail investors, they have a lot of exposure in American and Chinese companies that both rely on each other. A lot of American companies would not become profitable, your blue chips as well. And a lot of Chinese companies make up people's retirement portfolios, right? So if we hold up if we look at things like the S&P 500, for example, and you have very similar indexes like Vanguard, for example, that heavily follow the S&P 500, a lot of these companies, basically this is probably the health of your pension, right, or your retirement fund, or managed by institutions and hedge funds. If Chinese companies do delist and America cuts ties with China, then do you think that the S&P 500 would be at these inflated levels? No, it would drop down drastically, because the value and the revenues and the profitability of most of these companies are going to be gone. So when we look at this, it doesn't make sense for Americans in general to want this to happen. And people have this like idea it's a zero sum game, right? Where it's either China or the US, but that's just not how it's going to work in a globalized economy where there's over 8 billion people and where there's only 350 million Americans. Like, you have to have an economy that works together. Plus, if you were to delist a lot of Chinese companies, what rich investor, wherever they're from, America or China or India or wherever, are going to be happy with this? They're not. So it's never going to happen. Unless if it does, it's World War III. And then when we think about things like the regulatory and cooperation concessions, if both regulatory bodies are showing willingness to collaborate, right? Like every couple of months, the SEC and the Chinese, I think it's like the SCC, are showing signs that they want to work together to find a medium ground, right? If the SEC and the Chinese Exchange commissions are trying to, make resolutions because it benefits both economies, this already proves that these two countries are trying to work together, because the repercussions for not doing so are tremendous. So we do see like the SEC working with China in order to keep Chinese companies listed. But if you were to read, like, there's a lot of repercussions too, right? So a mass delisting of Chinese companies would create so much volatility in the stock market, right? Because, for just as a small example, if you were to delist Chinese companies, do you think that China would retaliate by cutting off American businesses from their stock exchanges? Do you think that they would stop doing trade with American companies? You very well, but you better believe it. Like, they're gonna cut trade with China as well. So China would cut trade with America as well. So a lot of these companies won't be profitable, and you would probably see the S&P drop to all-time lows, which means that no one in America is going to be able to retire anymore. And if you think that we have high inflation now, the inflation rate would be even higher if that were to happen. Like, no one's retiring anytime soon. But then it would also create more stability in the stock market too, which is just not good for investors like you and I. This would inflate all prices: home prices, food prices, goods and services, everything, because that's how much we rely on China. Like, if you look at your planes, if you look at your cars, if you look at your houses, if you look at your goods and services you buy, they're all made in China or heavily intertwined with China, which means that the prices of these things would inflate to astronomical levels. So it's like, even if you wanted that, like, even if Americans wanted to gain their own independence from a globalized economy, one, can they really afford it? No. Two, do they have the manpower and labor that wants to do these kinds of jobs in manufacturing? No, they don't. And so, yeah, it doesn't really make sense. And then, like, if they were to delist Chinese companies, you got to think about, like, diplomatic relationships. The importance of Chinese and U.S. relations is one of the biggest, most important things to keep global stability. Without this whole world's going to go into chaos, because not only would the Chinese economy fail, but the U.S. economy would fail, and smaller economies would fail too. And this would also mean that a lot of growing and emerging economies that rely on the current way that the financial markets globally are structured, that like borrow credit from the US, that borrow credit from China, that rely on goods and services from China, that means that these economies would be completely destroyed. Like, I think billions would die. So you can delist them or and have billions of people die, or you cannot delist them and work together, because it has to be a win-win situation. There's no loss, there's no win-lose. It has to be a win-win in a globalized economy, because at this point China and the United States is like two legs on the same human, and if one gives out, that person's gonna die. Okay, like if one person's leg gets chopped off and starts bleeding out, they're gonna die. So they have a vested interest that both countries succeed. And if these U.S. financial markets, especially like the New York Stock Exchange, were to delist Chinese companies, how much value do you think these stock exchanges would lose? Like these, again, like if you were to delist the Chinese companies from the New York Stock Exchange, don't you think that more capital flow would go into the Chinese stock exchanges as well? Like, the New York Stock Exchange would lose a lot of credibility. It would lose a lot of prestige. Foreign companies wouldn't want to list their companies on the New York Stock Exchange, and a lot of political unrest and geopolitical unrest would incur. So, when you look at the stock exchanges, right? So, let's see. When you look at the market cap of these stock exchanges, right? The three biggest ones in the world are from the New York Stock Exchange, the Nasdaq, some European ones, and a lot of them in Asia. Not just in China, but like in Asia. And all these economies right here are heavily intertwined. It doesn't matter what they try to tell you, like that these Asian countries hate each other. They do not hate each other. That's made up. That's made up. That is made up colonialist ideas. Like these countries, if the United States were to fail, these countries would definitely ally with each other. They all have an invested interest in the success of each of these Asian countries, because they all benefit from a byproduct. Like if a stronger China means a stronger economy for all the surrounding countries, because it means more trade. I also think it's important to realize that the Western media and the American media, it's always like you're always going to get a colonial, untrue perspective on things. Like it's always like there's so many nuances in this, and they'll say like the New York Stock Exchange and America is allies with Europe, parts of Europe, Canada, and like Japan, for example, and South Korea. But if the United States were to act against human rights in different countries, don't you think that these countries also worry? Yeah, because they're next on the chopping block, right? So I'm telling you this from an Asian person's perspective. Like, I don't think any of these countries think that America is their friend. I think that it's a mutually beneficial circumstance right now. But if China were to grow economically, then of course they're going to increase trade relations with China because they benefit from that. But these economies are ever growing, and this economy is probably slowing down, which is the byproduct of of industrialization. These countries are industrializing much faster because there's much more to grow as they are emerging. But you can't wish for China to be unstable. You can't wish for China to collapse because I don't know, in the past 200 years, I think that maybe the United States has acted against more human rights issues than any of these countries. Maybe, well, they've done a fair of a lot, right? Like the Native Americans, the Native Hawaiians, other countries that they're exploiting, the Middle East, China itself, other parts of Asia. Like these people have done a really lot of terrible things. And how America's financial system is ran, like don't they exploit other countries too with their lending practices? But colonialism will tell you that the America is all about democracy. But is that true? It's debatable. But my point is that you can't have any of these economies fail, because if one of these economies fail, then every other country is going to be dragged down too. So these countries have to rise. They have such a high population. There's a lot of resources. They're essential. If they don't rise, then this would negatively impact the United States as well. And I don't want to get too much into that, because then we're talking about like immigration. We're talking about like Yeah, a lot of things with immigration and population decline and things like that, and I really don't want to get into that too much. So it's in everyone's best interest to make sure that all these countries do well. But yeah, so if these if Chinese companies were to be delisted, then they would not be ranked 1 anymore or ranked 2. And don't you think like European companies or other Japanese and Chinese or Korean companies will maybe list their companies on other exchanges too, like in China, like in Europe, because they're worried that the same thing could happen to them as well? And then, when it comes to like retaliation too, you think China's just gonna be like, oh, thanks, you delisted me? No, they're gonna start taking away their business, which means that we're gonna have an economic collapse in America, which means millions of people die. Your pharmaceuticals, your drugs, your goods, your services, your food, everything, majority of it comes from China, and so you're gonna be losing a lot of stuff. And I do expect billions of people to die. So the economies just become more and more intertwined as we move towards globalization. So you have to ask yourself, if there's been this impending doom of China collapsing for the past 40, 50 years, and it's never happened yet, is it going to happen tomorrow? Next week? Maybe not, right? It's like you can a broken clock is twice like wrong like twice a day or something, or once a day or something, twice. Yeah, so it's like you have to be really careful of like what you think, because it could take away from like in future investing ideas. But basically these countries are so intertwined that if one fails, the other fails, and that's just not good for anybody. So when you look at Chinese companies, right, you want to look at these things and think, like, is this a good deal, or is it a good deal to you? Because that's only something you can decide on your own. Like, no one can really tell you what's best for you. Only you really know what's best for you, right? But when it comes to like a war of Taiwan, that makes no sense. Like, the Chinese economy, like Taiwan, first of all, with the way that the one China policy works, is that it's not necessarily defined like whether Taiwan is the main province or mainland China's provinces are, but they're both China, and almost every country, including the United States, acknowledges a one China policy, and it's intentionally ambiguous in order to keep the beneficial, like the benefits. The United States gets to export like weapons and electronics and import these things from Taiwan, and they can do it with China, with Taiwan, and then Taiwan also benefits from trade of China and the United States. So they're kind of like the middleman, right? So they benefit from how things are. So do people in Taiwan think that China's going to invade when like their relatives live in the same place? It's not the same thing like Russia and Ukraine. It doesn't benefit China, Xi Jinping, or the Chinese government to quote unquote invade Taiwan. That's like if the United States were to invade Texas or to invade Hawaii. Like, it's not happening. Like, it doesn't make sense. You're not invading your own country. Like, that's your own country. So I think when it comes to that, it's just used as a political tool to bring and invoke fear, to rally up voters, to change market sentiment. And so you can't really suppress these types of companies. Like, if companies like NIO, for example, are doing well and they continue to perform well over time, you can't suppress the stock's price forever. And this is proven with companies like Li Auto. Right? So Li Auto IPO'd, I think, based on this, it must have been around 15 to 20 bucks or something. It IPO'd around here, and now it's almost doubled in share price. It's a little bit on a downward trajectory, but despite all that, though, like the whole market is in a downward trajectory, so majority of these companies are probably not doing so well. But a company like Li Auto shows that it's not, the fear is not really real. It's like the boogeyman. It's not real. It doesn't make sense, but that's what the markets do, right? They try to find reasons to create volatility for day-to-day traders, or day-to-day reasons, or to create money by creating volatility. The news only reports bad things because that's sensationalization, and bad news is what grabs viewers. They're never going to talk about good things because that doesn't bring in the views, right? And that doesn't create volatility. And also, when it comes to investors in general, like if you had $10 million to manage, or $1 billion, wouldn't you want to scoop up companies when they're at their lowest, not up here? Like, you don't want to scoop up companies here or here. You don't want to scoop up companies here, or here. You want to scoop up companies when they're low, like here, down here. You want to get these companies at the lowest point. So if you only report good news, and that's what these companies are going to do for the most part, they're going to keep improving over time. How are you going to make the stock's price lower? You're going to talk about China bashing. You're going to talk about war of Taiwan. That's never going to happen. You're going to talk about delisting fears. That's just not really rational, to create negative sentiment. And even if you're a trader who thinks like, this is never going to happen, but I have to trade on the market sentiment, then you're going to like trade with the market sentiment, right? So even if I thought like, okay, like Li Auto is never going to be delisted. It's a great company that's profitable, that's only doing better over time. But then like China fears come out, and then like the stock price drops by like 25%. Am I going to ride that momentum down? Probably, right? Because even if I don't agree with it, I have to trade with it, right? But even when it comes to China invading Taiwan, that doesn't make sense, okay? It's kind of like the United States, Washington government, or whatever, invading Texas or California. It's just never going to happen. It doesn't make sense. It is not beneficial to anyone. And then, like, I don't really think, like, when it comes to our politicians in America, they really understand the China history in China, or they really understand China or ever step foot in China. And look, even if they know like what they're saying is kind of baloney, they have to write out. They have to stick to the script, right? So, the best thing to do is look at, is this a good deal? Like, what is a good deal to you? Can you really keep these companies this low forever, right? Like all these companies, right? If we look at the holdings of just the MSCI of China, like, can you really keep Tencent that owns like big companies like Riot Games in America? Like, there's so many American companies in this too. Alibaba, Tencent, Meituan, PDD, Baidu, JD, like these are all like the Googles of China. Like, can you really get rid of these things? BYD, like, can you really expect these companies to stay low forever? I'd argue no. Like, they need to raise capital, they need to start paying dividends, and eventually they will if they become profitable. So you can't just ignore value forever. But to me, it's all cyclical, right? What comes up must go down, and what comes up can keep going up, but it's not forever. You cannot. It's like coming to terms with your age. As you get older and you start growing in your career, your income, if you keep growing in your career, is going to follow, and you can't just ignore that fact, right? If you make like 80 grand a year, and then you turn 35 and you make 150 or 120 or 110, like, you're still growing in income, right? Cash flow is becoming better, your profits are become higher. So you can't ignore this reality forever. And you maybe you can't snap to that reality immediately, because maybe you might be in awe or delusional, or people make you feel bad, so you'll doubt yourself, but that income you're making is still there. So With that being said, if you have any questions or comments, I'd greatly appreciate that. I really don't think Chinese companies are ever going to be delisted. It just doesn't make sense. And if that were to ever happen, you should you're better off buying canned foods and hiding in your bunker because it's World War III. With that all being said, not a financial advisor. I hope you have a good day. Do your own due diligence. This is just